One renowned retirement expert and former Goldman Sachs banker is stepping forward and revealing his #1 way to beat inflation. It's a way to receive a nearly 10% yield from the government with virtually no risk. Folks who take the 3 simple steps he's sharing right now could receive nearly $1,500 from the US Treasury in as little as a few months. Best of all, it's guaranteed by law, and you could pay 0 taxes on this low-risk investment. Considering how rapidly inflation continues to soar, you don't want to waste any time missing out on the potential profits he believes are in store for this investment. So to get a copy of his new free report with all the details, simply go to beatinflation2022.com. Again, that's beatinflation2022.com for a free copy of his new report.
Hi, this is Daniela Cambone of Stansberry Research. We are continuing our coverage here from the Ripley's Aquarium in Toronto during the PDAC, the world's largest mining conference taking place in Toronto. Thrilled to be reunited with our friend here, Jeff Clark, Senior Analyst of goldandsilver.com. Jeff, it's been way too long.
Yeah, it's been over a year since we talked, so I'm glad to be back with you.
Way over a year, and here we are at the world's largest mining conference in Toronto. How are you feeling? Are you feeling good about the space?
Well, yeah, I mean, gold's obviously down. We think it should be doing better, right? It should be back above 2,000 easily, but you know, the usual culprits, right? The strong dollar, yields going the other way now, so I think there's probably a bigger event going on, and that's, you know, margin calls, liquidity, that sort of thing. That's probably the biggest culprit in my mind that's pushing gold down and keeping it from rising a lot further.
Can you explain to the folks how that works? I know it's a big ask.
It's a sell everything environment, and there's a lot of pressure on institutional investors, hedge funds, etc., even retail investors that are on margin, and they have to sell in order to meet margin calls or for liquidity concerns, or they're just basically panicking and want to step out of the market and go to cash until things calm down.
That makes sense, but what do you say to the folks who say, no, Jeff, it's a prime example of gold manipulation at play right now?
There is gold manipulation, that's a fact, there's no doubting that. I don't think that's a big reason why gold isn't moving higher. I think it has to do with a spiking US dollar. Gold is priced universally in dollars, they're inversely correlated, that's going to put pressure on the price. Yields put pressure on the price, the liquidity concerns put pressure on the price. But we saw that in 2008,
right.
We saw that in 2020, and what happened? Gold rebounded and silver in both of those instances quite dramatically. I expect that to happen again at some point.
At some point?
Yes.
Somewhere.
Well, the Fed will probably raise, the Fed's going to raise
right.
rates a couple more times at least. You know.
So let's talk about the Fed.
Okay.
Because as we're speaking, the Fed has not, you know, there's rumbles that the Fed may put 75 basis points on the table.
Right.
Will this, how close are we to triggering a recession, or do you think we're already in one? And 2, will they be successful in reining in inflation here?
Inflation was what, 8.6%, I believe, in the last reading, so they would have to raise rates that much to really impact it. I don't see them doing that. In fact, I bet Rick Rule at the Cambridge House, that if the Fed's real interest rate, the Fed funds rate, gets above 2%, that I'll shave his head on stage. Because I don't think they can do that.
I'll put the razor.
You can film it, yes, because
I was going to shave it. I was going to shave his head.
Be my guest. Be my guest. He was like, why bother? You know. So, but really, can they really afford to do that? They can cause a recession if they raise rates too much. They can cause a stock market crash, which is what we're kind of already seeing, right? When people get pressured and people get afraid and people are reaching out for help, what is the Fed going to do? Are they going to keep raising rates? And they can't afford it anyway.
What's their biggest nightmare, though, now? A lower U.S. dollar, crashing stock market, or inflation?
All of the above, and all of the above are happening except the dollar, and that's, you know, at some point the dollar's going to have to give. We all know that. There is an end play here at stake, right? The dollar can't last forever. It's not sustainable. because of our debt load, because of our deficits and all that, and so therefore it's...
Are you concerned though, Jeff? Because I feel we're just at the start, that things are just building. It's like a pressure cooker, right? And particularly gas prices. Like, how is an average person supposed to get to work with these prices?
Right.
Right? And then the food shortages and, what's bread going to cost? I mean, what concerns you and keeps you up at night?
Well, I think inflation is probably going to stay elevated for a long period of time. The last time we were in an interview, I said inflation's going to rise and it's not going to be temporary like the Fed said it was going to be, right? So that call was right, but I did think that gold and silver would rise in response to that, and they obviously have not. Gold has held up pretty well. It's actually up year to date as you and I talk. It's up even more in other currencies. So it's kind of doing its job, but at some point all this has got to give. Even people that are not into gold acknowledge that the current system is not sustainable as it is. It can't last, and I think that big picture game plan is what I'm personally playing for. That may take 2 to 3 years to play out, but it's coming because the current system is not sustainable as it is.
As it is.
Right.
As it is. So probably not going to be successful. Inflation here to stay. Interest rates.
And that's the thing. When does this kind of break? When does it go the other way?
Yeah.
When does the Fed pause or even drop rates? The average time from when they stop raising rates to when they actually reduce rates is only like 7 months historically. 7 months, that's it. And so when they stop raising rates, let's say it's in the fall, they could be lowering rates by the new year.
Yeah, but I know I had asked other folks this. I'm curious to get your thoughts. Do you think they're not concerned about the optics of that? Like, here they are for the longest time telling us we got to raise rates, and then to just reverse course. I mean, what would that say about their decision-making skills? Do they care?
Well, there's a couple steps between now and then, right? And if inflation remains elevated, maybe they can't lower rates right away, right? But even just pausing that is going to have a dramatic effect, and I think that's eventually where we're headed. Maybe even this year, we'll see. Okay,
I want to get a question about the U.S. dollar. Your thoughts about, why is it so high right now? I've had folks on saying that they need to keep the U.S. dollar elevated. They need to keep the reserve currency status at all costs, and this is their main mandate. Do you think there's something bigger at play here?
The spiking dollar isn't all of that. There's probably some of that at play, sure. But the dramatic spike in the dollar is because institutions and investors, hedge funds, everything is rushing to the dollar, either buying bonds or going to the dollar, going to safety, that sort of thing. That's what's putting pressure on gold as well. And I think that's the bigger culprit at play. So at some point that'll calm down. These things cycle. I think that's the message. These things cycle. This is a down cycle. Settlement is as bad as it's ever been.
Everything
but
is
they
cyclical.
turn around. It turned around in 2008. It turned around in 2020. It's turned around in many times throughout history. It'll turn around again.
I'm just going to share an anecdote. So I'm at the Billy Joel concert the other night in New York City.
Okay.
My husband's a fan. And so, the song, We Didn't Start the Fire, right? And if you listen to the lyrics, I'm having this moment at the concert. And I'm like, that song came out in what? Oh. Early 90s, maybe?
Yeah.
The lyrics, slight change of events,
right?
But still pertinent to today.
We should insert a couple things into that, rewrite that song for us.
But I will not sing it and spare everyone.
Okay.
My lack of singing skills.
Okay.
I will not pain the audience. Okay, final question. We were here at a beautiful silver event. We started talking about gold. I know you said investors are frustrated, but should we not end it on the note that gold is still one of the best performing assets of 2022 in this backdrop? We don't talk enough about
Other
this.
than the U.S. dollar and oil.
Yes.
Gold is the best performing asset,
so there you go,
especially
folks.
in other currencies. It'll turn around. Look at this event. I couldn't even get my ticket. I couldn't even get my badge because I couldn't get in because PDAC was so crowded. What does that tell you about investor interest? It'll turn around. Of that, I'm confident.
Jeff Clark, I love speaking with you. So good to do this in person.
Yeah, I still wanted you to name your twins Argenis and Aram, gold and silver. So maybe for the next set of twins that come, you can do that.
Oh boy. I'm good with Alex and Jordan, I think.
Okay.
I miss them. Hi, Alex. Hi, Jordan. Thank you. Thank you, Jeff. And thank you so much for watching. We'll have much more coverage coming your way from the Ripley's Aquarium during the PDAC here in Toronto, and we are proud to be media sponsors of the event, so stay tuned to Stansberry Research.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.